The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be going over winning trade setups, not only ones that occurred this week, simple, reproducible, scalable setups that show up weekly on any instrument, but also the simplicity of just developing the mindset of sitting and waiting and hunting repeating setups. A lot of information has been taken from the playbook and turned into all kinds of other things. And again, traders getting caught into minutia and missing the bigger picture, this simple understanding of daily signals. 3 days of breakout traders triggered into the market. First red day, first green day, the inside day. Day 0. The key word in all of these is the word day. The key word is day because it's a daily signal from the daily chart. And we're targeting a daily range, whether that's a reversal trade or a trend trade. Now, we've gone over ad nauseum the only 3 things that markets do. And the key thing to understand with this is that when we sit and wait for signal days, we're potentially targeting a daily range on the setup when it presents. And those are the scalable opportunities. So I repeat to traders, a lot of traders are getting taught things that were so-called from my playbook, and they're catching little moves and little sweeps and little hunts and saying that they can scale in. But if you're scaling into a market that's potentially not coming back, or it's going on a range expansion, those are the trade setups that can significantly compound your trading account. The most important thing I want you to grasp from this video is simplicity. Simplicity. Getting away from the compulsion of chasing markets, chasing little bars on 15-minute charts, on hourly charts, on 1-minute charts, on 5-minute charts. The only time I'm going to the smaller time frame is when I have a daily signal. A daily signal, and then whether or not we have the trade setup on the day. Now, we're going to walk through different instruments from this week. As several instruments gave multiple signals, we had several opportunities. And as I keep repeating to traders, 2 to 3 scalable opportunities a week are enough to significantly compound your trading account. Now, traders get chopped up chasing little bars, and they're telling me it's a break in structure and everything else. There's no such thing as a break in anything unless you break a daily level. Everything is based on the daily time frame. Everything is based on the daily time frame. Some key things that I want you to take away from today's video. Everything comes from the daily time frame. Sitting on your hands is what you need to be doing until you get a signal day. You only need 2 to 3 scalable opportunities a week to significantly compound your trading account. This is a simple, reproducible, scalable trading model because these signals and setups happen every week on different instruments. And sometimes your favorite instrument will give you a couple of these opportunities every week. Now, a lot of traders are focused on minutia, on small time frames, chasing the moves, which is okay. But if you align that with the higher time frame and the 3 things that markets do, again, you can significantly compound your trading account. The biggest thing is being patient. Impatience, FAFO, impulse are your enemies. They're the things that will lead you into taking trades, chasing movement, and then calling it a trade. Convincing yourself that because you got in and got out, that you caught the move. And that's fine. Every trader has their own beliefs, their own approach, their own skill set, mindset about how they want to trade the markets. I'm talking about positioning myself into markets that are about to explode for parabolic winning trade setups. They're scalable because all time frames are driving these moves. And when they go, it's because they have traders caught on the wrong sides of these markets, chasing the smaller time frame trends. Daily time frame. Daily signals coming from the daily time frame. These signals all come from the daily time frame. So if traders are getting caught or they're struggling, as I mentioned earlier this week, I've talked to traders and told them to stop trading and only focus on the inside day. Now, if they had only done that, this week alone would have significantly compounded their trading account, as several instruments gave the inside day signal. Simplicity, reproducibility, and scalability, repeating over and over and over again. It's the trader that's the variable. The same signals show up every week. Markets do the same things every week. It's the trader that jumps all over the place, chasing movement, calling them trades. No reproducible, simple model that you can come back to that grounds you, grounds your psychology, grounds your mindset, grounds your daily process about hunting the best 90-10 parabolic trading setups, the winning trade setups. Markets only do three things. Only three things. We repeat this in every video. There's nothing anybody can deny about these three things. And if you keep it simple, this helps you hunt out the money-making winning trade setups. First of all, they'll break out and they'll pull back and continue to trend. So markets are either going to fail when they break out, they pull back, they continue to trend. They break out, they may attempt to continue to trend, but they fail and reverse. We call that a reversal opportunity. So we have trend trades and we have reversal trades. And as we talked about in last day's video, there are only three things a trader can do on any given day: buy, sell, or do nothing. But the great thing is that if we're hunting rinse and repeat opportunities, the signal days that we get are undeniable. Now, people are calling them traps and everything else. Now, traders need to really understand the daily time frame. Markets that are in breakout are not traps, they're counter trend days. And traders who are trying to get in front of a falling knife or a rocket ship are still not sticking to a plan. They're just chasing markets. And of course, the third thing a market can do is stay in a trading range between a high and low. And typically that will be a weekly range. Monday sets the opening range, Tuesday initial balance. We can have markets that pump up to one of those extremes and dump, or dump down and pump in a trading range. They can still offer us one day all-in opportunities, as we just spoke about, for a daily range. Daily signals targeting daily ranges on our setups. Not about catching pushes, catching moves, minutia, little bars, gaps, sweeps, hunts, runs. We're targeting rinse and repeat setups. That's the playbook. That's the whole point of the playbook. Coming to the screen each day, looking for the same reproducible setups that happen weekly. One instrument might give one setup for the week. That's why we have the basket. We're just hunting two or three. Now, on smaller time frames, obviously instruments with higher volatility will offer traders opportunities within those ranges. But until your expertise and your results show that consistently, stick to simple rinse and repeat opportunities. They show up every week. Let's just review a simple process understanding the weekly template. Any instrument. So I've had traders say, well, this doesn't work on the NASDAQ, or crypto's different, or what about this, what about that? My response is the same. Every single market is the same. But if you're chasing your favorite instrument and chasing little bars inside of daily ranges, I have no idea what you're doing. What's your plan? What's your daily modus operandi that you go to the screen? Are you chasing movement, or do you have a setup that you're targeting? We just said markets only do three things. Monday is the opening range. That all starts based on Friday's closing price. It establishes a high and low in the new week. We've talked about new weeks, new months, new timing cycles, new opportunities. Doesn't mean you have to trade Monday. You may have a setup on a Monday because it's broken out of a level. A new week starts. We have Friday's closing price as the reference point. Doesn't matter if there's a gap. Doesn't mean anything. It's the instrument. So do we violate a level? Now, if traders are trading inside, again, what are you targeting? If I'm targeting a daily range, then I need a setup occurring at one of those levels, whether that's a failed breakout or a trend trade. We just said Monday's the opening range. If day 2 typically expands that range, we can have day 1 runners that close and breakout on a Monday that set up a reversal trade on Tuesday, day 2, because we've already had a large range expansion. Which instrument sets up the best? We can have trend trades that expand the range on day 2. For example, the euro closed in breakout on Monday. In our Europe-London session, we have a continuation, a trend trade. Broke out and made a higher high in the Asian session. We're coming to the screen in London. If you're trading Europe and London, wouldn't it make sense to have the euro in your basket? We may get one setup, a nail and bail opportunity in our Europe-London window. It might be on the front side, it might be on the back side. Monday closed in breakout. Tuesday, day 2, typically expands the range. The Asian session has made a high and a low in a market that's broken out. Markets only do 3 things. We have a trend trade setup. Now, keeping things really simple, rinse and repeat, page 29 in the playbook, the basic model for trade entry criteria, gives traders the opportunity for a trend trade, nail and bail opportunity, 0 stress, 0 thinking, 0 emotion, and for the most part, 0 management. We have an entry at a level and our continuation trade. We can target a 200% expansion of our levels, our consolidation levels, high of day from the previous day and our low of day, for traders to target a take profit level. Keeping things simple, entry, stop loss, take profit level. That's just a simple rinse and repeat opportunity. Now, we could have had this opportunity in the US window. So for example, a trader trading the US session comes to the screen in the New York window. We have the euro on our watch list because it closed in breakout. Markets only do 3 things, but it's already left the station. Now, some traders are going to try and trade the reversal. That's not my setup. That's not really what I'm looking for. I'm looking for either the trend continuation or a reversal trade. Now, if I'm looking for a reversal trade on a signal, I want to be selling high. That's me. I don't want to be selling down inside, catching the move back down. But for the traders in the Europe-London window, that's a simple, basic breakout, pullback, trend continuation, trade setup opportunity. A range expansion on day 2. We had a signal, then we had the setup into the timing window, and then the simple entry, stop loss, and the take profit level. That's rinse and repeat. The instrument is irrelevant. This could have been the Swiss franc. This could have been the Japanese yen. It could have been gold. It could have been an index, the DAX. But just a simple rinse and repeat. Signal day. How did the instrument set up into the timing window? You may have had 4 or 5 instruments. This may have been the simplest or the cleanest or your favorite. It's just a simple day 2 range expansion. Now, there can be instruments that set up closing out the week. We had an inside day signal on the British pound. So we backed this up. We've been following this market. It closed in breakout the previous Monday, continued on day 2, expanding the range. Wednesday's the reset day, resetting on Wednesday, the midpoint range of the week, closing in breakout again, restarting our count. Day 1, day 2, day 3, Friday's an inside day, closing out the week, the closing range of the week, but we're starting a new month. So this is where traders get caught and they go, well, it was 3 days of breakout, and they're trying to short it up top, but there's no sell setup yet. There's no sell setup yet. It's continuing to go higher. When markets are in breakout, we don't do anything until we have a reason. We don't just blindly short them. And as I've talked about, inside days can be the exhaustion at the extremes, monthly extremes. We saw evidence of that in our new year when President Trump took over, several explosive moves on our daily time frame. Remember, these are daily signals. It's not about me chasing the bars and catching the moves. What signal do we have? We have markets closing in breakout. How do they set up on the day? They continue to break out and go further. We get an inside day closing out the week, and you'll notice we have 3 levels of rise. We have our breakout level. This just reiterates Dalton's phrase, markets that are out of balance can continue to stay out of balance, which means if something's trending, don't fight the trend. If there's an opportunity for you to trade with the trend, as we just saw in the euro, we can have day 2 trend trades. It's whether or not you get that opportunity in your session. It may move in an earlier session. It may not move, and it may set up for a 3-session setup. Wednesday, day 3, midpoint range of the week. Resetting is day 1. Day 1, day 2, day 3. Every single week, it's the same thing. It's whether or not you get a signal, a daily signal, and whether or not you have a setup in your session. So we start our new week off, and several traders took advantage of the false break reversal. Now let's just reinforce this simple concept. If it's a false break, guess what? They don't give traders an opportunity outside who are on the wrong side to be in the money for long. It traps new breakout traders in the markets. And on an inside day, typically, they're going to target the money on the opposite side of the range. All time frames can be caught into that move. Trigger new breakout traders, trigger traders chasing that move. Day 1, day 2, day 3 from the extreme, the high of the week, the high of the month. Our new month starts in our new week, our new timing cycle. And what do? They hit the stops. They trigger new breakouts at the beginning of the new month, getting traders going long, breaking out, triggering other time frame traders into the markets at the beginning of a new month. Go back and watch my higher time frame videos. We also have a market that now breaks down. Several traders asked if this was a first red day. It doesn't close below the open, but guess what? We have the first red day characteristics. And what are first red day characteristics? Peak formation, high, reversing, and closing lower. Takes out the low of day level, pumps back up, getting traders to see this as a close-in breakout. But guess what? We're underneath of the high of day. So we have inside bar traders now triggered on the long side. And this breaks down for traders in our Europe-London window. Now remember the 3 things that markets do. They break out, they fail, and reverse. There's our inside day reversal opportunity. We have a market that closed in breakout, that consolidated sideways and broke down and failed underneath a peak formation on the first trading day of a new month. A lower low on the inside, pumping up, coiling, and dumping. Day 2, expanding the range on the downside in a new month. Breaking out of the low of day level, pulling back, and continuing into our U.S. session. A larger pump, coil, and dump template. Daily signal days. Markets that closed in breakout. An inside day signal. A market that breaks out on the day heading into a new session. There is nothing hidden from any trader. It's whether or not you're patient and you're sitting on your hands and allowing the larger time frame template to set up. Now this was also a unique week because we have non-farm payrolls on Thursday, as Friday is July 4th, an American holiday, and the stock markets are closed. We have an inside day, and coiling into the weekend, we can see a range day that can stay consolidated, which, although we've broken the high of day level, this can turn into a double inside day. Double inside day from the playbook. Why is that? Because we're inside of a larger outside range day that occurred on Tuesday. So if we're targeting daily levels, you can see where traders will get caught inside chasing a break of an inside day on an American holiday when the market may actually just be coiling sideways. Contrast that with a market that has established a larger template for a daily range expansion. Remember, we keep talking about daily ranges, targeting a daily range for profit target potential. We take out a weekly level, lock in the money, and walk away. Scalable opportunities for large all-in trading setups. But I want to hammer home to traders, there were several other setups on pound crosspairs. This is one. We can go through 100 instruments, but it's the same setups on different instruments every week. But reinforcing the concept of a scalable all-in opportunity, month money, as opposed to catching little pushes and, oh, it moved and I caught the move. What rinse and repeat setup are you hunting? We have signal days, and then we have setups, and then we have larger templates setting up with signals that can alert us to large scalable playbook trading setups. And in between, learning to sit on our hands and do nothing else in between that can damage our good results. And then blaming it on something other than ourselves for doing degenerate, impulsive, random, self-sabotaging things. Stick to winning trade setups, wait for signal days, and learn to do nothing else in between. Then you can significantly grow your trading business. Let's look at the indexes. We'll look at the Dow first. I want traders to really think simple, really focus on simplicity. We had a market that broke out on Thursday. It closed the week in breakout. This brings these instruments up on our watch list because they're in breakout. Breakouts may fail. They may continue to trend. Now, before we even get to our New York session, this market has already made a higher high on Monday. A higher high on Monday in a market that has broken out. That means that the market is still going higher. Now, one of the things that is important that traders have asked me to go over is the closing range. And I've talked about this. Markets that close in breakout, of course, can continue to trend. Breakout, pullback, continuation. They can break out, fail, and reverse. And I've talked about going back and building your muscle memory. How many times on a Monday have you reversed a range? We're heading into the end of the month, the last trading day of the month. We have a market that's broken out and continued to trade higher. If Friday is the closing range of the week and Monday goes higher, we may still have a market that is continuing to go higher. Now, I also said something to traders the last few weeks about being long biased the indexes. And why is that? Because long-term, the indexes go up. We're going to have months. We may have years. We can have weeks that go down. But I'm only looking to sell the indexes when I have a selling setup, not because it's up high, not because it's, gone straight up. Where's the actual daily signal and setup? So we have a market that's closed in breakout, made higher highs, and day two, we just said, typically expands the range. So no setup on Monday in the New York session. Day two typically expands the range. We have a market that closed in breakout in a larger consolidation template. It's still in breakout. The breakout hasn't failed. Not only do we have a larger Friday, Monday, Tuesday consolidation, but we have a narrower consolidation on Tuesday, day two. And all this is a trend trade. Now, we've talked about major red news. We wait for after the news release. Now, a few minutes ago, we just saw an example of a day two range expansion trade on the euro. We had a signal day. We now potentially have a setup, a market that's coiling sideways into our timing window, U.S. Index 930 New York Open. Traders from the masterclass will recognize the sideways coil. How does price set up into our timing window? Now, we had 10 a.m. major red news. So at the open, we already have a textbook perfect day two setup exploding into our New York Open. After 10 a.m. major red news, traders still have the same opportunity to position themselves in the market using the same approach: entry, stop loss, and a take profit level. Keeping things simple. Now, we'll look at this in a couple perspectives because in the playbook, we talk about the first bounce opportunity. Page 101 in the playbook. That is based on entering a market after major red news based on the higher time frame setup. We always have to have a larger, higher time frame setup. We had our signal day, we had our perfect setup, but we had 10 a.m. major red news. So we sit on our hands and wait. Now, for traders, as I've said, if you want to get in before major red news, that's entirely your prerogative. Discretionary trading is just that. You're using your own discretion. Now, you could put a very small position into the market, but you still run the risk of spikes, gaps, whatever. But if we wait for the news, we can still enter the market after major red news, controlling our risk in line with our higher time frame thesis. Now, if you're prepared and you know that you have your opportunity already in place based on the open prior to the major red news, we can project a 200% expansion of the range. Now, the market didn't quite get there at the close of the day, so traders may lock in the bulk of their profits and still leave a trailer. This isn't a Friday. It's not a Friday closing out the week. This market is on the front side still of a week. So we can leave a trailer in that may potentially continue, but we can lock in the bulk of the profits. We can adjust our trailing stop on the trailing position underneath of that last U.S. session swing low heading into the close. If it stops us out, so be it. We've removed the bulk of our profits at the close, pretty much near the high of the day. But into the new day, that market continues higher on the trailer. We can lock in the trailer on that 200% expansion. It's a day 2 range expansion, a daily range. But just think simple. It's a trend trade. No pushes, gaps, sweeps, runs, inversions, or anything else. Market closed in breakout, successive daily levels, closing in breakout, continued to break out and expand the range. First new day of a new trading month. It's a trend trade. That's it. Entry, stop loss, take profit. Nothing more complicated than that. Anything more complicated is all in the trader's head, convoluting it with all kinds of gibberish and silly things. It's a trend trade. There's 2 types of trades, reversals and trend trades. That's it. It's a trend trade on day 2, expanding the range. Now, Wednesday, our midpoint range of the week is also our reset, and there's no setup on the day. We have a market that's continued to go higher. When a market continues to go higher, it's still possible that the high is not in place yet. We'll go back in a moment and look at something else on day 2 on Tuesday for our ACB Masterclass members. But the market's still in breakout. So traders are calling this a first red day. Okay? We're still in breakout. It's a down closing day. It's a 1-day counter trend. I want to reinforce to traders, why would you want to short a market that's in a strong breakout? Now remember, we talked about leaving a trailing stop underneath the last peak formation low of the U.S. session on Tuesday, day 2. Wednesday, reset day, dumping down, coiling sideways into our New York session. Keeping things simple. We have a market that is making higher highs and higher daily lows. So remember, we said everything comes from the daily chart. Higher highs and higher daily lows. We have not broken a low of day level yet. We're making higher daily highs and higher daily lows. It's still going higher. Now, I got people calling these traps and everything else. The only thing is the trap is a trader who actually doesn't know what they're doing. There's no sell setup here. We're not at the high of the month. We're not at the high of the week. We're not at the high of the day. We are in breakout, midpoint range of the week. We dump down. This is just a trend trade, a day 2 backside trend trade. That's it. Larger ascending triangle coiling into our open. Now we're going to look at both of these day 2s, front side, backside. I keep talking about Peter Brandt classical charting. Everything is consolidations and classical charting patterns. We have a larger rectangle that's formed from the close of Wednesday's U.S. session heading into our New York window on Thursday. That forms a rectangle. We're just taking a projection of that high-low as a potential profit target, a classical charting consolidation pattern. The same process applies that we just saw on day 2, that we saw on the euro, that we saw on the pound charts. When we go to enter a market, there are only 2 things a trader can control: how much they will win and how much they will lose. Placing a stop, an entry, and a take profit level. Let's go down to a smaller time frame and take a look at both of these day 2 setups. Before we do that, though, I just want traders to step back and look at the bigger picture again. We just have a market that's in breakout and continuing to trend. That's it. No pushes, sweeps, gaps, inversions. Markets do 3 things. They break out, they pull back, they continue to trend, they break out, they fail and reverse, or they stay sideways in a trading range. This market is in breakout and has continued to stay in breakout. We've had day 2 front side range expansion and a day 2 backside explosive range expansion. Now, this particular pair, we've gone back over other examples in the masterclass. These are rinse and repeat setups. Tuesday, day 2, we had major red news, 10 a.m. You cannot trade against the coil. We have our 10 a.m. first bounce opportunity after major red news in line with the coil. 10 a.m. we have our first bounce entry. Don't trade against the coil for the explosive range expansion. A day 2 trend trade in a strongly trending market. Now, there's nothing to make, you don't have to turn this into a rocket science project. Keep things simple. Wait till after the major red news. Align yourself with the trade setup, entry, stop loss, in either a hold till close or a range expansion take profit level. Now, on the other days when you don't have a setup, don't do anything. That's the funny part. Traders think every day they got to go there and take trades. I'm looking for daily range trade setup opportunities. And when they set up like this, these are the setups that can significantly compound your trading account. Unless you understand the setup and the patience to sit and wait, you'll be caught chasing all the minutia, catching a move, and then going to a 1 minute chart and explaining why you needed to, it was a certain setup. And no, it's a day 2 range expansion, a trend trade. Keep it simple. Entry, stop loss, take profit level. Walk away, come back the next day looking for a signal in your basket, looking for the same type of parabolic explosive trade setup opportunities. I talk about my friend Steven. He only trades reversals. This is an example of a reversal in line with the trend because traders are caught trying to catch the high in a market that's now going to explode in a range expansion. The reversal is still in line with the trend. He doesn't even come to the screen till 9:45 a.m. This is a perfect opportunity. And on a smaller time frame, on our 1 minute chart, we still have our same trap coil explosive continuation trade, the trap and shift. Whether he's going in the long direction or the short direction, take a look at this pattern. Doesn't matter if it's on a 1 minute chart, a 15-minute chart, a daily chart. Trap and shift. Trap and shift in line with the higher time frame template on a day 2 range expansion trend trade. Now remember, this market's already in breakout. It's been in breakout since the end of last week. We broke out again on Monday. It's continued to stay in breakout. We're already in breakout. We're trending. We're already in breakout long. So when traders say you're on the inside, no, we're actually in breakout on the higher time frame. The daily chart is in breakout. We had non-farm payrolls, sitting on our hands and waiting, not trading a U.S. index on payrolls, doing nothing. But once the market is about to open now, we already have our coil. Whether traders position themselves on a smaller time frame, this is a 5-minute chart, we have our coil into our New York Open. This is an example of a opportunity right at the open for traders to position themselves in the market. Non-farm payrolls in a case with a high impact major red news release, aligning ourselves with the higher time frame template, is an opportunity where traders, if it's part of their trading plan, to take a position prior to the open of the market or waiting for that market to open on the first minute. So traders in the masterclass will recognize the coil, but this market is already in breakout on the higher time frames. We're already in breakout. Remember what I said, daily signals, daily ranges, and then aligning ourselves with the setup. Non-farm payrolls dumping down, coiling sideways into the open. This is a 1 minute chart. We can use a 1 minute chart because this is an hour after non-farm payrolls, a high impact major red news release. We have a market that now first minute, second minute, third minute, and we're still in our coil. We can take a position, we can place a stop, and we can put a take profit level in place. Now, there's two things I want traders to realize with this is that this is a 1 minute chart, and people go, oh, the 1 minute chart's too volatile and everything else. I want to make something very clear to you. There's 1 hour from when payrolls is released at 8:30 New York time to when New York opens. 1 hour for you to formulate your thesis and have a game plan in place. 1 hour. And then on top of that, you have 3 minutes. The market pins down. We have an engulfment, then a pin down, and then another little bull candle closing in breakout. But we have a level. So I want you to sit for 3 minutes and realize how long that is. But you've had 1 full hour to formulate your thesis with a market already in breakout that has also given us the ACB coil. All time frames are driving this move. So when traders say it's too volatile, that means they're not prepared. That means they don't have a game plan. And then they start talking about pushes and this and that. It's a trend trade. Entry, stop loss. We can project a 200% expansion of our high-low consolidation. We can hold till close. We can do whatever we want based on the nature of this setup. Now, the explosive momentum of this after a non-farm payrolls on the back of a week heading into the 4th of July gives traders the opportunity, because Friday's a holiday, to take profits, lock in the money. Friday's a holiday in the U.S. The markets most likely will consolidate. They may reverse. And if we just zoom out to our 5-minute chart or 15-minute chart, we can see that that market has pulled back into traders that were long on the explosive day 2 range expansion after non-farm payrolls. Now, just in simple terms, traders will also recognize now that heading into our new week, that breakout may have failed. Monday's the opening range starting off our new week. After a 3-day weekend, we can see large opportunities that can present, and we may see a market that potentially might give us a first red day signal on the backside of a week. Pump, breakout, possible failed breakout first red day signal, maybe a lower low on Monday. Monday's the opening range. Tuesday, day 2, may give us an opportunity on the backside of a week or heading into a continuation opportunity. Front side, backside. Keep things simple. Signal day, setup, timing window, behavior of price, behavior of the trader. In between, learn to sit on your hands and do nothing else but wait, so that we don't engage in self-sabotaging, random, impulsive behavior that undoes all the good results we get when we do things right. Daily signals, daily ranges, targeting winning trade setups. Keep things simple, traders. Now, traders today had an opportunity in the Europe Open for a beautiful parabolic collapse. What I found humorous about this particular setup, number one, we had our signal day, again, which every single trader has. It's whether or not they do their homework. Several traders in the community, congratulations, they had this on their watch list. But you'll notice the daily range expansion as a take profit level. Now we're heading into the U.S. window. Again, the U.S. Stock markets are closed. I don't trade when they're U.S. holidays. But what's great about this particular setup is we have a simple, reproducible playbook setup. Now, page 58 in the playbook, we have a template, which is just the basic sort of first red day signal. And the exact same setup today on copper, just for traders who, again, brought up an instrument on their watch list, who were trading any session, but in this particular case, sets up into our Europe-London window. Our basic model for trade entry criteria, page 29 in the playbook, gives traders a simple entry, stop loss, and a take profit level, a daily level-to-level range expansion. A daily level-to-level range expansion opportunity, a scalable opportunity. And for traders in the masterclass, they'll recognize that all time frames are driving this move for a scalable parabolic blow-off. Not an ACB, but it may end up being an ACB. It's a holiday in the U.S., but locking in the money. It's a Friday, so we're closing out the week, but an opportunity for a parabolic, fast, explosive move. And again, as I repeat, when you're in these setups, they should be accelerating into the money right away. No gibberish of auctioning back and forth in a trading range and hoping that over the next 12 hours it goes in your direction. Targeting specific opportunities when they present to scale in and make, as Richard Dennis says, a lot of money very, very quickly. You have to minimize your losses and try to preserve capital for those very few instances where you can make a lot in a very short period of time. What you can't afford to do is throw away your capital on suboptimal trades. And this is where traders really, some traders really get it now. They're just sitting and hunting these types of opportunities, whereas other traders are scratching their heads and going, well, it all looks good in hindsight. Well, that's the whole point. Master hindsight and you can make a lot of money rather than chasing little minutia and then calling it a trade. Caught this, caught that, but where's the scalable opportunity? Now, traders on Tuesday, several traders in the community also had a fantastic reversal setup in our US window. Now, remember, there are only 3 things that markets do. So we had an inside day on Monday, which brings this onto a trader's watch list. The traders that are diligent, that are doing their homework, and they're coming prepared to the screen each day. The market broke out on day 2. Now, again, at this stage, this is not a failed breakout. It's been in breakout for a few hours. Remember what we went over in the initial pound, first part of the video about the British pound. False breakouts reject immediately because they have traders trapped and they're going to go back and get the money. Now, in this particular case, the market pumps back up again right into our timing window for the 10 a.m. club, our 3rd hour in the U.S. window, giving traders the parabolic reversal. Markets only do 3 things. They break out, they pull back, and they continue to trend. It tried to break out into our new timing window, our U.S. session, before failing and reversing. An example of a nail and bail trade setup opportunity. Nail and bail on the front side. We expanded the range. If day 2 expands the range, we're trading back into our breakout. Traders coiling sideways, even if they held till close, we want to lock in the money. Why do we want to lock in the money? Well, we're day 2 front side. Now, for traders who didn't lock in the money on day 2, we're front side still. It's also the 2nd trading day in the new month. Day 1, day 2, trading back to the high of the week level, expanding the range. Day 1, day 2, Paul Tudor Jones, if a market's giving you an indication of a range expansion, pay particular attention to that. Day 3 blows off in the direction of our range expansion before reversing, giving us the inside day and the parabolic collapse on the backside. Day 2 on the backside of the week. On our 5-minute chart, all this is the same simple model. We have our entry, our stop loss, and taking profits, either holding till close or taking profits as we consolidate sideways. Simple rinse and repeat model. The instrument is irrelevant. We had a signal day. We had a market that broke out on the day. We had a setup into our timing window. There are only 2 types of setups, trend trades and reversal trades. Which instrument gave us a signal? Puts it on our watch list. What is your preparation and your understanding of a rinse and repeat executable trade setup? Hindsight pays. If you're not using hindsight, it might pay to start studying hindsight, because hindsight is where traders are significantly compounding their trading accounts. Daily levels, daily ranges. Get away from minutia, little bars. Get away from stuff that's completely non-playbook related. Get back to the basics. Master simple rinse and repeat setups that you can reproduce on any instrument week in and week out. Master your behavior. Master impulsive random trading. Get away from little gobbledygook minutia. Simple, rinse and repeat, and scalable. Keep it simple, traders. Have a great weekend. The same things are going to happen next week. Different instruments, different sessions, same setups. Markets do the same things every week. You are the variable. Become constant and master your mindset and master winning trade setups. Have a great day, and may the markets go with you.